Hello everyone, today is Friday, April 9th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning in, welcome. Thanks for joining us. Hopefully I can make it worth your while here. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. Those are things like correlation, volatility, credit markets, sector performance, market internals, all the good stuff, put it together, pick apart everything that stands out and looks interesting. And then in part two, we jump into the charts, look at those longer term trends, and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the headlines, some of the takeaways from this week. We had technology leading the market higher this week, and that started to happen last week. We talked about kind of the pop up in tech, the fact that it held the line where it needed to. It started to perk up a little bit, and we got some nice follow through, sort of a short-term breakout in tech this week. We're going to talk about that. We had the US dollar roll over this week, or find follow through that sort of put in that little inverted kind of head inverted hammer look if we're looking at TA on the weekly chart for the dollar. We saw that last week, and then we saw basically the selling follow through this week. We're going to talk about that. And we got earnings season, which is basically here upon us. And we're going to have all these wonderful companies giving us guidance, reporting earnings in the coming weeks. So let's jump into the numbers here. In terms of performance on the week, you can see that 3 out of the 4 sectors, 3 out of the 4 U.S. indices, that is, closed in the green, and pretty sharply in the green. We saw the Dow up 2%, S&P up 2.5%, the Nasdaq 100 up almost 4%, one of the best weeks it's seen in quite a while. The Russell 2000, this one here, now this is interesting, this is notable, this is different. The Russell 2000, remember, had been the relentless leader for this market for the first, call it 3 months, and it started to kind of top out, and it continues to just move around sideways here. In fact, look at the 1 month performance numbers. You can see the Russell 2000 is down 4% over the past 1 month. And look at the rest of the market now is playing catch up and is starting to, pick up the slack and help lead this market to the upside. So you're getting a little bit of a changing of the guard there. World stocks, a little bit of a laggard, but still positive, up almost 1% this week. In terms of market internals, very, very constructive week. Look at those new highs coming through, over 1,000 on the week. That's exactly what you want to see. That's a healthy market. That's stocks breadth across sectors and industries, across different sizes that are working and making new 52-week highs. That is good inflow of capital there. And NYSE cumulative AD line, that's the second row here, up 2,200, a little bit on the light side. You'd expect that to be a little bit higher, but probably speaks to some of the small cap underperformance on why that's not a little bit higher, but still nice firmly positive number. Percentage of stocks in the S&P 500 over their 20-period simple moving average sitting around 80%. So getting a little bit into that hot territory, but still you can see lots of participation. Cumulative 52-week highs minus lows. So we look at the aggregate here. And if you recall, go back about 2.5 weeks, 3 weeks, this is where we started to get a little bit nervous when we started to see this ratio, the number of stocks hitting 52-week lows starting to outpace the number of stocks hitting 52-week highs. When this started to move to the downside here, that was a little bit of a concern. That was a warning sign for us, and we started to just look around and, shore up our positions. But that didn't last long, right? And the move came just a few days later where you had to change gears quick because the breakout happened and we started to make new, this chart started to break out to new highs here, and that has just basically been the trend ever since. So you had to be a little agile here. That is why we do these videos. That's why we stay on top of the data. The best we can do, again, we're not trying to, or at least my goal is not trying to forecast into the future. I think that's a hard thing to do. I think it's just best to sort of analyze the data that we have in front of us now and just react in the moment to what the market is showing us. And if you can do that, and sometimes you get a little chopped up, but if you can do that, you can hopefully ride and stay on top of those bigger trends. So this here is still a very constructive chart. from my point of view. If we look at sector performance, you can see almost everything was in the green today. Look at the downside here. If we're looking at the right-hand column, just energy. Energy down 4%. You're starting to see now a little bit of a more specific picture. So we first looked at indices. We saw the Russell was the laggard. It closed down. Now we look at sectors. We can see, okay, it's energy that's dragging things down. And even later in this video, we'll look at industries, and you just get that very specific view, kind of top down is how we like to look at this. So you can see energy was the downside here, down 4%. Real estate was up 0.5%. Materials was up 0.69%. Those rounded out the bottom three. If we look at the top three, tech at the very top here, 4.61%. Consumer discretionary and consumer communication services, top 3 to 4 to almost 5% this week. Excuse me. And so if we look at correlations, I think this here is a beautiful chart because there is something that we can really sort of hang our hat on and just look at what's driving this market or how these markets are sort of interconnected here. And it is the middle column, this UUP. What that is the US dollar index. And that is strongly inversely correlated this week, well, really over the past 10 days, to just about everything. And so what we're seeing here is really back to the dollar driving a lot of this action. Now, of course, we can be cynical here and say that this is just random, you know, kind of correlation that's going on here, doesn't imply causation, but regardless, I think it's worth noting here and just looking at what is moving in the opposite direction of everything else this week. So when we saw the dollar roll over this week, we basically, what this is basically suggesting to us and showing us is that everything else benefited. So the dollar rolled over and S&P was up, Nasdaq was up, Russell was up, gold was up, silver, like everything else kind of moving in the opposite direction. Whether or not they're totally up on the week, it depends, but that's the correlation. That's the inverse, very tight correlation that we're seeing going on here this week with UUP. So that's interesting. That's notable. And that's what I'm looking at when I look at this chart. If we look at volatility, let's go back one more. Volatility continues to fall. It's sort of been one of the calls. I use that term very loosely, but one of the things that we've been kind of keying off of and looking for continuation, which is for volatility to continue to fall. We've been talking about this now for a few weeks now. When VIX was north of 20, we were saying it seems like it wants to. It feels like it's heavy. Seems like it wants to trend lower, and that continues to be the case. We're getting a 16.61 VIX. That's the lowest VIX we've seen in over a year. Things are coming back to normal, and that looks good right now. Now, maybe it's moved a little bit too far too fast, right? There can always be some short-term flare-ups, but for now, we're putting a lot of distance between where we're trading now in the VIX and up in the 20s. Which is where we just spent so much time in over the past year. So that is constructive. 3 month is pretty steep. So this is actually a pretty steep relationship here. I don't have the specific data going on right now. I haven't looked at the study, but I do see that, you know, the 3 month out VIX term structure here up at 20.5 is pretty elevated. So there's some opportunity there, which goes beyond the scope of this video. Interest rates and credit. So we saw yields falling this week, mostly falling. So on the long end of the curve, they were pretty flat. TLT is pretty flat. 10-year, though, a little bit more. And then the shorter term 5-year, even a little more. So we saw yields kind of falling mostly on the short end of the curve. Bond proxies here not doing a whole lot. We're up on the week and kind of what we would expect. If we look at the dollar, you can see dollar down 0.76%. That's a pretty good move for the dollar. It's a big move. Gold was up, silver was up, Bitcoin basically flat to slightly lower. It's been chopping around quite a bit there on just the recent weeks. Ag was up, crude was down, natural gas was down. So a pretty mixed picture there in terms of commodities and so forth. Report card is once again check marks across the board in A. And I think last week was one of the first A's that we've ever been able to hand out because the volatility environment finally started to get back into more reasonable territory, and we got a second back-to-back A for this market. So things are looking good right here, and that continues to be the case. Now, if we look at our positioning here, I think this is actually very interesting. I want to take a moment to kind of explain this. So we run two trading systems here. They're two totally independent trading systems, and they operate with different rules, and they actually operate on different time frames. So our Merlin trading strategy on the top here is 100% invested right now across 42 positions. So it is basically all in on the market. Now, of course, there's stop losses and everything else. It's risk managed, so it's not a blind kind of buy forever and hold. It will clearly move out when it feels appropriate to. But right now, it's basically riding this uptrend in stocks, and its time frame is a couple of months, really. 5 weeks plus is what it's looking at. Now, Lamerick here is much shorter term. In fact, last week when I showed this slide, I believe Merlin was like 90% long, and then Lamerick was like 50% long or something around there. It was pretty into the market. And what a difference a week makes, because now take a look at this flip here, and it's 74% on the short side. So this is holding 9 positions. All of them are shorting this market. It has basically been getting increasingly short, particularly this Thursday and Friday. So what does this mean? Basically, what Lamerick's saying is it's trying to pump the brakes here in the short term, and it's trying to say that this market is moving pretty quick, in particular stocks, of course, and it is looking for opportunity to the downside. Now, the time frames are totally different here. This is looking out a couple of months. This is looking out a week, or something around that time frame. So this is the beauty. This is the power of sort of running two trading systems that are doing different things, because you do get sort of that diversification. You get things doing differently, doing different things at different times. And what this basically means to me, if I'm allocating half my capital to both of these systems, is that I'm basically like 30% net long right now. If you were to interpret it like this. Now, thing to keep in mind, this system moves quick. So again, come next week, this could be back to the long side. So I don't know how this obviously shakes out. I don't give updates throughout the week. So just be careful if you're looking at this, trying to follow it blindly. We do post our trading monthly performance reports. In fact, March's just went out, and we do recap all of the trades that we put on the week, during the month, in those performance reports. So you can always take a look at that and kind of backward look and see what we were trading if you are following around on these exposures. So that's it. That's, I think, kind of interesting there. If you want to learn more, check out the link appearing in the top right. And with that, let's jump into some charts. All right, we are back. We've got WORDEN TC2000 open. We're looking at our equity market grid. We have price itself, the white dashed lines across all of these charts, and the multicolored dots are a custom smart trend filter indicator that we've developed. It measures price and volume across time. Got some price action relationships in there as well. If you're a TC2000 user, you can download that. You can learn more about that on our website and our store, with lots of other indicators and scans there. So if we look here at this time frame, looking at the weekly chart, S&P 500, there's no change, so we're not going to talk about that. This has been bullish for as long as I can remember, and that's basically the same. Now, the top right is a little more interesting. This is the Nasdaq 100. Again, this is the weekly time frame. It's actually still in printing this yellow kind of turbulent or indecisive state here, which is pretty surprising. I would have expected this to turn up, but it looks like it's still just hanging on here before it turns green, and clearly had a very strong week this week, and it is well above its filter price, but it is still in the yellow, which means it hasn't fully signaled back into buy bullish sign. Now, the way we usually interpret these indicator changes, or the color changes here, is that we give the benefit of the doubt to the prior trend. So in other words, the prior trend or the prior direction call here was bullish, was green, was buy. And when it comes down into the yellow, we still kind of give the benefit of the doubt to the prior signal. And basically that held up pretty well. The idea here behind this indicator is that it tries to reduce the chop and from getting whipsawed and for signaling and selling and you know, buying and selling and transitioning too much. And that's why we have that yellow neutral state, is to act as sort of the, you know, that in-between state to reduce the noise. And there's lots of different ways you can manage it and position and trade it and all that fun stuff, but it goes beyond the scope of this video. So long way to say this is still transitioning, but clearly wants to turn up. The Russell 2000, on the other hand, did switch up to a green buy state. And this is ironic because, of course, we had a negative week this week. So even despite the fact that this was down, this managed to turn up. Despite the fact that the NDX was up 3%, it's still kind of sitting in indecisive land. ACWX here, so international stocks, still very bullish here on the weekly chart as well. No change there. Now, if we go down to a daily chart, this is where things get a little different, of course. We have the S&P 500, which is still in its buy signal. That happened last week. The Nasdaq also happened last week as well. It printed green here on the daily chart. So again, markets are kind of fractal in nature, right? We're looking at things on different time frames. So this here is showing that the daily chart went bullish last week. We saw a continuation this week. This isn't a buy signal on the daily. Here's the Russell, and this is the Russell 2000 here. And look how messy and look how just different this now looks than kind of everything else. I mean, maybe the ACWX is a little bit similar to it, but the S&P 500 is clearly just, you know, running to the upside. Nasdaq's running to the upside here. Russell 2000 very clearly just running sideways. So that is what's taking place here, and you're seeing that chop kind of settle in here in the Russell 2000. So that's the trend outlook. Let's go to some candlestick analysis. Let's look a little bit closer at some of these charts. Let's go to, the S&P 500 first. We'll go to the daily chart here. This is a very easy chart to analyze because we're trading at all-time highs. We closed at the very top of Friday's range. There's no overhead supply, and you know, there's just not a whole lot to really look at except for the fact that this is a very bullish, strong chart here. Now, clearly, I guess what we could, you know, look at is the fact that it has covered a lot of ground in, you know, a short amount of time now. There's been lots of opportunities here to get involved in this trade, going all the way back to this session here on the 25th when it held support exactly where it needed to at 38.70. Maybe that wasn't enough to get involved just because it still was a little more of an uncertain picture. But clearly after, you know, the follow through day on 326 here, this gave you a lot more confidence to switch gears and potentially get long. But even if that wasn't enough for you, you still wanted to see a little more sideways develop. Well, you got exactly that. You got a couple of days going sideways, and then you got a gap and go sort of breakout here on the first. This should definitely at this point now have gotten, you know, you back on the long side here, and it's been able to now kind of move up and enjoy a nice move. You could be kind of trimming into strength or trailing your stop, all that good stuff, which, you know, again, is going to vary depending on how you're managing this trade. So all of that, you know, I think we're talking about all of those steps along the way in past videos. Now, when we look at S&P 500 here, it's, you know, one of two things. It's one, if you're involved in it, then you're kind of just, again, managing risk. You're trimming, you're selling some into strength, you're raising up a stop, or you're just sitting on your hands. That's basically what you're doing. Now, if you're looking at downside levels, this is the last relevant big level that you have to work with here. This is 39.80. This is now about 3.6% below where we're currently trading. That's exactly where you want to see the market hold going forward if you're bullish on this market. If you want to see the momentum continue in here, you want to see us hold over 39.80. That's the read that I would have on there, and that's a decent ways away. So if you're looking for pullbacks, if you're looking for higher lows in here, I'd say that this market is opportunistically looking for, you know, pullbacks is sort of long setups is the way I would be looking at this market. Now, if we look at the Russell 2000, this is definitely a different picture here. So this is now moving sideways. It did not break out with the rest of the market. It is still very choppy in here, and there's nothing wrong with that. Inherently, this has been the market leader for a very long time. This basically, you know, was pulling the market up earlier this year January, February, late last year, all the way up to around 230 or so, and that's where it started to stall out and move sideways. So it's trading just off of its all-time highs. It's had a very strong multi-month move, and let's give it some time to just move sideways and chop around here. Doesn't look like it's close to resolving this one way or the other, so there's basically lots of ways you can kind of think about this. You could be, if you're, again, bullish on this market on a longer term outlook, you're basically looking to maybe accumulate Russell down in the lower 200s. I don't know if we, all the way down at 205 might be a stretch, but dips down into the lower teens in here might be a way to, slowly kind of average into this. If you're a fan of working in that approach, of course. And if you rather just buy on strength, then, it's basically a new high would get you, that momentum and break out to the upside. That could be a signal. Or if you want to, kind of cheat a little bit and use like 230 or this recent pivot in here around 227, if it starts to lift over there, then maybe you're cheating in and you're legging into a position that way. That's one way to think about it. Of course, that's if you're bullish. That's if you're optimistic on this market. If you think we're about to roll over, if you don't like the way things are looking, if you think we've moved too far too fast, don't like the earnings season coming up, then you're looking to short a breakdown here. It doesn't matter to me. I have no bias whatsoever. I'm following price, and I'm willing to sort of respect and adjust to that accordingly. So if that's kind of what you're thinking, then a breakdown below 205 or so, this turns into a topping pattern. Very well could be. I won't rule anything out. It's not where my head would be. It's not the way I would be thinking about this market. I'd be looking at it more glass half full, but that's just me, and again, willing to adjust that outlook. Nasdaq 100. So here it is. We talked about, let's see if I can get this board. Yeah, I think it was this board here. So, we've been following this. We had the kind of, measured move down, this two-legged move down in here. And then we, kind of rallied back up into 323, hit this resistance, and then chopped around in here. We found support exactly where we needed to, around 310. We pushed up, and I think we even went down to a lower time frame last week, and we looked at this, wasn't a perfect inverted pattern, but we basically said, this is resistance here at 323. The bulls want to get us breaking out above it. And that's exactly what we saw starting off this week. We had a gap up, and we basically didn't look back. We continued to just grind higher, and we have new all-time closing highs here for the Nasdaq 100. So very encouraging action here in the Nasdaq. Earnings season, of course, is coming up. This is this, sector of the market that was left for dead back here. And we were all kind of worried about, the value trade and growth is dead. And here come value stocks for the next years or whatever the case is. And now you can see that's, kind of flipping back on its head a little bit. Now, of course, there are plenty of stocks in the queue still that are well off of their highs. The index itself, the market cap weighted index, is back at highs, and that is encouraging. So for me, for the bulls here, again, covered a lot of ground in pretty short order. I would just like to see this digest a little bit up here, stay above 325, 330, ideally next week. If we chop around, pull back, that's fine. That's opportunity, I would think. Ideally we want to just stay back up and get closing at new highs is the most constructive outlook. So that's the way I'm looking at it. That's the way I'm interpreting this market. Hopefully that's helpful. And again, just know your time frame and what you're looking at in terms of outlook. So we talked about the Qs breakout, talked about earnings coming up. Let's just look at some more charts here. Let's look at VIX. We already did touch on this. But if we pull up the volatility index here on the VIX, you can see basically getting the new lowest close that we've seen going all the way back to now February. So we're coming back down into the teens here. We've been just dropping lower and lower. Again, if we get a pullback in the market, if we get some type of small rug pull here, I wouldn't be surprised to see this pop back up into the 18s or so. But I'd be, pretty hard pressed to think we're going and staying back over 20 unless something meaningful changes in terms of a new catalyst developing in the market. It seems like the volatility wants to settle in. I said around, I think I've been saying like 15 to 20, somewhere in that range. That's a wide range too, but that might be the new sort of sandbox that we can think of for VIX. We'll take it one day at a time, but constructive to see this continue to roll over. If we look at USO here is one that was very notable. We talked about the breakdown or this thrust off of the trajectory here way back on the 18th of March. And the thinking was, it didn't have to just totally roll over, but looking at some volatile chop sideways or sideways to bearish action seemed like the path that was going to be, kind of coming up after the 18th. You can see we very much just got the chop and volatile action. We've been going up and down, seesawing back and forth, 3-4% days up and down. But now we're starting to tighten up a little bit, and you can see there's lots of overlap here. So I would say the USO here is about to be, moving out of this range here. And I think that's going to be key next week. We'll see which direction it ends up resolving. And it's done a good job at holding the line, though, and not totally rolling over. So the odds that maybe this breaks back out to the upside is probably increasing a bit in my eyes. But I don't have a position either way, and I'm still just be waiting to see which way this tips. But I think this is interesting. It's a notable to set up for next week. So watch this compression. Got basically back-to-back inside days, and you got this nice range that has been compressing over the past 2.5 weeks. So USO, I think that's notable. That's interesting. And I think that's it. So let's move on to some of the more specific. So again, we kind of take this top-down approach. We start with all the data, the indices, the sectors, and market breadth, and all that. And we slowly just kind of drill down tighter and tighter into what's actually moving and driving this market. This is our sector and industry sort of continuation analysis here. So I've broken it up. I've got a couple of different scans here. So basically we have bullish of interest sectors and industries. We have bearish of interest sectors and industries. And then we have some just sideways consolidation. You'll notice clearly there's nothing in the second panel here, which is basically a bullish signal in itself to say that there's nothing that, at least the way I've constructed some scans and notable price action, that is notable in interest of to the downside. So that's constructive. If we look at this one sideways consolidation, this is telecom. So this one here is basically just showing us that the telecom services sector is just getting ready to move potentially, but it's also been going nowhere for 5-6 months. So watching this might be an interesting setup. It's just something that I have down there. Now, if we look at some of the bullish developments going on this week, and we actually, let's just sort this by, let's try and make this as logical as possible. So for technology, so we're going to start with tech sector here. This is now computer systems within tech. Okay, so this is an industry within the broader technology sector. So this is one sector that is standing out this week. It is standing out because it's breaking out to new highs. So if we, of course, would look at some of the components that make this up, here it is. So you get some, Dell in here. I mean, in terms of notable names, I'm sure many of you would know a lot more of these names. Logitech, right? And so on and so forth. So you can see this list. You can see the stocks that are holding up well. So this is an industry that is working and breaking out to new highs here after consolidation. The rest here, you get a big group of industrials that are working. So shipping and ports. Take a look at the volume coming in here. This is why it's on this list, is because look at the volume that's coming up here. It's not quite back at highs, but there's been heavy volume coming in. Shipping, security and protection services. So this one here starting to move back up towards highs. Starting to get back up there. It's a daily chart. Let's go to a weekly chart. So there it is. Weekly chart here. You can see closing weekly at new highs. We can see business equipment, right? Continuing its trend to highs here. Had a 2.5-week pullback. This is already back to highs. Airports and air services here closing at new weekly highs. So that's continuing. We've got some healthcare in here, healthcare plans specifically, heavy volume coming in this week, closing back towards highs. And then medical care. So you can see this has been going very, very tight up here near highs. And now you can see this is breaking out to new highs as well. You got some financial services in here. So you got credit services, new highs there. We got insurance, new highs there. Another insurance category here, got new highs. Discount stores, right? So you get really, now we're moving on to consumer defensive. You get discount stores, this sector here. So if we look at some of the components, you can see like BJ's, Wholesale Club, you can see Target, you can see Walmart, you can see Dollar Tree. These are some of the stocks that are moving, helping this move up. We got beverages moving up here. So again, still in the defensive area. And then if we move into cyclicals, it's a long list. You get apparel making new highs, apparel again, luxury goods making new highs. Got one in gold, which is an interesting one. That's probably coming in on some heavier volume here. But this one is starting to set up this basic sector here for gold, starting to shape up a little bit. And then we get some agriculture, last but not least, in terms of industries. So ag inputs here. So you get names like a bunch of names here that I probably am not going to recognize or be able to pull out off the top of my head. You can see some of those tickers here that are working to the upside. At the bottom here is just sectors that are breaking out. So you got financials, it's a sector now. So financials breaking out to new highs. Healthcare moving to new recent highs here. Let's go to a weekly chart. New highs. Technology, new highs. Consumer discretionary, new highs. Semiconductors, new highs. So there's a lot here working to the upside that gives you a taste of some of the more granular sectors, industries, components that are helping fuel this market. So hopefully that was helpful. That is the full roundup that I have for this week. As always, I'd love to know what you thought about this video, about this market. What are you looking at? Are you a little spooked that everything is moving up and working? Or do you think this is just more, kind of more of the same and we're going to see more continuation to the upside? Leave a comment below. I'd love to hear it. And as always, I want to thank you for tuning in, spending 30 minutes of your day listening to these videos. If you like them, you can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend, and we'll see you back here next week.